thank you for today. And
Very welcome.
I mean, I don't know. Obviously, this is Anthony, my colleague, who is we're a bit of a double act, Anton Chris rather than Anton Deck, as well.
Ooh, I didn't know you were on Instagram, Chris. What's your username?
Oh, CeeLo52.
Hello.
Yeah, I would like it to go on Instagram. I think it's, I've been sent someone else's podcast that is on Instagram, a Conrad from Sound Industries today. So look, and look, we aren't going to, the whole purpose, Kathy, is we want to learn. We just want to hear from you, and we effectively in the 40 minutes that we're filming, just touch on Downing, you, thoughts on the world, etc.
By the way, Chris, your username on Instagram is definitely not CeeLo55, because that's someone called
52.
Oh, 52. Okay.
I'm pretty sure it is.
CeeLo55 is someone who's calling themselves Taliban Youngin.
Oh boy.
Okay.
Don't think that's you.
Not me. Hold on. Let me just double check what my handle
52.
is. Hold on.
Jeez, that's unfortunate.
Yeah, that's me.
There you go.
Got you. Yeah, I got you.
Yeah. So, and I don't know whether we do, because generally all I use Instagram to do is it links into my Nike running. So at the end of each run,
it's a bit of humble bragging when you've gone for your
I'm
evening
just
job.
telling people that I'm alive.
Chris was last seen at this location.
And then,
please send help.
Yeah,
he's still there.
It's not really I wouldn't say it's a heavily used business channel for me, apart from promoting Nike, which is but there you go. So look, great to see you and hear you. And obviously we go back many years, actually.
Many. I was actually trying to do the math. I'm like, we met in 2013.
Yes, at Bloomberg. And remind me there, I was doing my thing with all of the early stage, late stage tech companies. Oh, first interruption. I'm on a podcast. Thank you.
Really trying to bring you a copy.
Deploy the defenses, yes.
So I would have gone, the defenses go away, Actually,
is that why you go running so much?
No. Well, yes, sometimes they do get eaten by me if I'm having a bad day. So it was way back at Bloomberg. I was doing my thing. I also remember you were one of the members of the Bloomberg crew who were really interested in the tech space, and you used to come to the events that I put on at Bloomberg under the guises of Notwix, and now that's what I call startups for people who don't know what that means. And I think was it then that your interest kind of to work in private tech kind of came about more, would you say?
Kind of. I mean, I was lucky with Bloomberg and being in the right place at the right time. So I don't think you know this, but I was a summer intern in 2011 in the HR department and spent a few weeks there and was like, this is, a great company, but definitely not the right corner of the company that I want to be in. Mm-hmm. And then I stalked Gerald Walker for a few weeks, who was the COO. I think he's still the COO at the time.
I would say, but he always used to pride himself on telling everyone that he was the first ever employee at Bloomberg
in Europe.
Yes.
In Europe, yeah. I quote him directly. He eventually helped me get a full-time job there, and he was like, "You're just about annoying enough for me to hire you." Again, one of those. But
and when you remind me, what were you doing at Bloomberg? I can't.
Yeah, so it was called Bloomberg Ventures for a while, and then we had a bit of a rebrand, and we're called Bloomberg Institute. Yeah, and so our division was all about building new products for new industry verticals, and the vertical that I attached myself to is the education vertical. So we're looking at what products can Bloomberg launch that will extend the brand into the education space. And so the first product we developed was the Bloomberg Aptitude Test, leveling the playing field for kids from non-target finance schools to get access to opportunities in finance. And I just loved the mission of that.
Yeah.
So really threw myself into that. And that's what we were doing. You know, we'd hear us on the phones, kind of cold calling universities, pitching them on setting up these test sessions. And I think we just, pretty much annoyed everyone in our vicinity because they're like, you guys are so loud. You're so annoying. But it was a lot of hustling, actually. You know, I'm very mindful of when I speak to founders now, I'm not referring to it as startup experience, because we had multi-billion-dollar backing from day one, and we had the plush headquarters and all the benefits that come with working in a place like Bloomberg. Entrepreneur, exactly.
Free
And
canteen as well.
Oh God, yeah. And if you could, they were so clever about it.
The fish.
When you came.
So what people used to say to me was like, this is just a paradise for fish and free food.
Well, Chris, I don't know if you know this, because I used to do the office tours. I don't know how I got that, you know, thankless job, but whenever students would come in and get tours, I was always the, you know, person showing them around. And fun fact, so Bloomberg London has the largest private, I don't know if they still do, but at the time had the largest private reef fish collection globally.
Wow.
Fun fact. Never going to forget that.
It was an amazing place. Fond memories, I think, for all of us. But
definitely.
So then, next step was Downing.
Not quite, Chris. Not quite.
Sorry, my research is wrong.
Yeah. So I loved what we did there, and we launched 2 products in the time that I was there. Mike Bloomberg pulled the plug on the Bloomberg aptitude test after about 1.5 years, and then we launched a second product, and I loved it. But I wanted to be in the room when decisions are being made about what do we launch next. And I owe so much of where I am today to my managers at the time, Joy and Rob. I'm not sure if you ever met them, because they were based out of New York. And they're so influential on my kind of decision-making process from there onwards. But Rob specifically had done an MBA as well. And he said, you know, it takes understanding how the engine works if you want to be in those kind of strategy discussions. And I was really good at our little corner of Bloomberg and understanding how, you know, what we're doing solves a very specific problem for a very specific audience. But he was absolutely right, that kind of zooming out and understanding, you know, how does Bloomberg LP operate? There was just a lot of gaps in my, you know, understanding. And you suggested I get an MBA. So I was like, that sounds like a good idea. So went on, got an MBA, and then actually joined Microsoft for a few months post MBA. I'm on
a podcast. No, go away. Sorry, bad parent.
Oh, that's your kid. I thought that was your wife.
No, I'm not that polite.
Why don't you throw like a Snickers out at him or something? So here, have a snack.
That's the clever one that knows that there's a supply in here, because but hopefully she'll get back. No, I'm sorry to interrupt. So
no problem. So yeah, I did a brief stint at Microsoft, and then just was really lucky again that one of my classmates, Michael, who's an associate at Downing at the time, said in our alumni chat group, you know, my VC fund is recruiting, is anyone interested? And I'd actually self-selected out of the VC track on the MBA. They weren't really my people. I also at the time was just like not entirely sure what the difference is between VC and PE. That, you know, shows you just how little understanding I had of what VC really was. And I just always assumed, I think as a lot of people do, that I don't have the kind of background that would lend itself well to being an investor. And what I mean by that was like, I didn't have an investment banking background. On the MBA, you know, I still never balanced a balance sheet. I was still kind of like a bit what? And so, yeah, just kind of self-selected out of that track. But then the more I learned about VC, I was like, oh my God, this is the best job in the world. How on earth had I not considered this as an avenue for me beforehand? And then took some time off work to really just do my homework on Downing, do my homework on VC. And convinced them to hire me. So 3 years in, still loving it, still convinced this is the best job in the world.
I was going to say, so you joined Downing in
March 2018.
Okay, and then, you know, I suppose with the people we have listening, I mean, I Downing to me is one of those a leading fund in the UK. So I think you definitely, you know, chose very well. Congratulations.
I was about to go this to Anthony. He's like, does he need to edit out what Chris is about to say?
No.
There was a lot of hesitation in your voice there.
No. And I was going to sort of add that, it'd be great for you to just give us the sort of Downing,
Sure.
the Downing deep dive, because I think people, the classic thing that we always get at Notwicks is when we have founders that come to us and we obviously are advising, we're trying to help map investor relations. They go, oh yes, we want to talk to this fund and this VC and like we've got no revenues and I'm like, okay, well, you need to really understand where these different funds are. And so, I mean, if you were to give us a sort of overview, what's the sort of nuggets on Downing that people should look for?
Yeah, and I appreciate our website sucks as well. So we always say, please don't judge us by our website, because it is actually quite hard to figure out what we do. So for context, so Downing Ventures is part of Downing LLP, which is an investment management fund that's been around since the 80s and actually does a whole bunch of things, which again adds to the confusion. So you go on our website and you're like, wait, do you operate solar farms? Do you, build care homes? And, answer is we do all those things. The ventures team has been around for about 7 years, actually started as a pre-seed fund, so investing 50 to 150K into businesses pretty much straight out of Techstars or, Entrepreneur First. And the strategy over the last 7 years has evolved a lot, even in the 3 years that I've been here. And for context, a lot of for listeners not that familiar with VCs, a lot of VC funds when they start out kind of either start as a pre-seed fund, or they kind of, if they're able to raise really substantial funds, they kind of go in at the later stages. And the reason for that being that Series A is so competitive that as a new fund that hasn't proven themselves yet, it's still hard, but it's easier to get access to opportunities at either the later stages or the earlier stages. And so Downing pursued that strategy as well, starting out as a pre-seed fund, building a track record, building a reputation, building a network. And now our focus has really evolved to focus on Series A and B. We can invest up to 5 million per round, and we prefer round sizes that are in the kind of 10 million US dollar range. So we really want to be coming into well-funded rounds. We love co-investing with other partners. Whilst we have significant follow-on capacity, and I can explain why in a second, we do like to come in alongside partners. So it's rare that we'll invest just by ourselves. In fact, in the last 2 years, there's only been one deal that we did where we didn't invest alongside other partners. And that's just because we know that obviously if you have to go out to market to raise another round, so follow-on round, and you don't have at least 1 or 2 existing investors who can follow on as well, it just makes that really hard for the entrepreneur. So we like coming in alongside funds who also have follow-on capacity, and it just means more brains on the cap table, right? So that's something we like.
Do you think syndicated rounds, is that very common in the UK VC market, or do you think that's something that's more recent, or what are your thoughts on that?
It's a good question, especially because there are nuanced differences, US versus UK. So I'll caveat that we've not done, and I personally haven't done that many investments with US investors, but from anecdotes, peers in the industry, and from everything I've read, the European ecosystem, and I'll right or wrongfully so include the UK in there, we are a lot more collaborative. So there's still more of a tendency to do, if it's a 5 million round, you might split it between 2 funds. The US has historically been a lot more, you'll have a fund who'll just, if it's a 10 million round, they'll do the whole portion for themselves, and and that's it, and they'll elbow anyone else kind of out of the way. From my experience and the deals I've worked on, there's definitely always been a tendency to share the round out between yourselves plus 1 other or 2 other investors.
Do you think that'll change as more money comes into the UK VC industry? Do you think it'll start acting like the US once it has the scale of the US, or do you think that'll be a European trait?
Probably. There's definitely a bit of a the kind of culture that seems to be evolving right now is, VCs, you have to be conviction-based investors, and that means, putting big bets forward. I'm definitely seeing a lot of chatter around that. Whether that's actually materializing, I'm not sure. But we also don't have the kind of mega funds, based out of Europe that you have in the US, right? There's been a handful not yet, right? Yeah, but there's been a handful of 4 billion plus funds raised over in the US. And granted, they are increasingly coming over here. I mean, Sequoia and Bessemer both set up shop in London in October last year. So, they'll probably up the ante a little bit in terms of rounds.
With that in mind, Kathy, have you actually, in some of the deals that you've worked on over the last few years, have you actually worked, has there been investment along, I may miss this because I had incoming for an iPad, sorry about that. Have you worked alongside a US investor or fund?
So we've done a bunch of deals of UK topcos. So again, for a bit of context, Downing isn't a traditional VC fund in that we don't have institutional limited partners. Our money comes from retail investors because we have several enterprise investment scheme funds, and we have one EIS, Evergreen EIS fund, that a biz dev team raises capital into on a monthly basis. But then we've also got 2 venture capital trusts. So these are tax advantaged investment vehicles, which I can bore you all with on another day.
Listed on the AIM and all that.
Exactly. And so they're evergreen, they're not kind of closed-ended funds.
So when you've been dealing with some of these different funds from the US, I mean, is there a differentiation in the way that the funds in the US work and UK and Europe? Is it, or is it, are you all relatively same focus?
Is it purely attitude, or do they have different ways of working as well?
I think it is the mindset of upside potential versus downside protection is definitely, there's still an element of investors, at least from my limited 3-year experience over here, are still thinking a bit, what's our downside here? How can we structure this round so that our downside is protected? We get our cash back first, et cetera, et cetera. US investors tend to do less of that and are more focused on, well, entry price is kind of irrelevant if this is a 10 billion plus opportunity. So they tend to be more focused on, getting the deal done quickly. Valuation is important, but not, if you're negotiating between 10 and 12 million, who really cares? Whereas, investors who are downside protection focused tend to be a bit more obsessed over the kind of minutiae detail when it comes to that. So that's definitely, again, from my limited experience, that does hold true, that, US investors just have a bit more of a, how big can this get mindset, whereas we tend to think, okay, what can, how do we make sure this doesn't go to zero?
Okay, that's good. So then moving on, just a bit more on Downing. So is there a particular vertical focus, and within that, do you have other, certain, I don't know how big the team is. Do you have certain people within the team that look at certain verticals? And if you can give a bit more sort of shape and on the size and the focus.
Definitely. Yeah, so we, again, for context, started out as a generalist early stage fund, really totally opportunistic, investing in pretty much anything that we thought was a decent opportunity without much attention to, is this a thematic that we want to be pursuing and digging into more deeply. And I think that was fine if you're investing at pre-seed and seed stage. But as we've moved more into, investing at the stage where it's all about making sure the business has product market fit, and it's about pouring the raise is about pouring fuel on the fire, we recognize that being more sector oriented and sector specialists not only helps us in terms of getting access to higher quality deals, because ultimately founders at that stage want to be working with people who will understand their business and know what they're talking about. And so we have started to narrow our focus, and that's mostly meant that we're no longer doing consumer investing. So we used to do consumer, enterprise, healthcare, which really doesn't rule a lot out. So now we're only doing enterprise and deep tech, as well as healthcare investing. And within enterprise, there's sub-themes that we're working on.
B2B?
B2B, exactly. Yeah, B2B, B2G, we've looked at that as well, just no more consumer. So we do have a bunch of consumer companies in our portfolio, continue to support them. It's not like we're just going to drop them, but we're no longer doing new investments in the consumer space.
Okay.
Yeah, so
yes, sorry. And then on the team, does you and a number of others, or is it?
Yeah, God, I always lose track how many people we are. So Downing's 140-ish people, and on the venture side, I think there's about 10 of us, most on the investment side, but we also have a bunch of venture partners and operating partners who help us with, just admin, day-to-day admin, portfolio reporting. And because we've got 76 portfolio companies, it's obviously impossible for all of us to, go to board meetings and look after every single one of them. So it helps to have people who are just focused on portfolio instead of also bringing in new deals. But my job is a combination of portfolio management as well as bringing in new deals and pitching new opportunities to my investment committee.
Okay, and then on that, obviously there's been a lot written in the last month or so on 2020 record year for VC investment into UK, US, Europe. I suppose, being a somewhat cynical person, the headlines tend to mislead some founders, because I would probably say there has been a general trend for most funds to be reinvesting in businesses that they've already invested in. And if anything, during COVID, there's been a skew towards that, and perhaps away from new deal flow. So obviously I'm asking that as a question. Is that what's happened at Downing? Would you say that's the trend that you've seen, and maybe you agree with that trend in the industry? Because clearly we have a lot of founders that come to us and they sort of say, oh, we see it's a record year, therefore last year, therefore it must be like off to the races, and there's loads of people who are looking at investing in us, and you kind of like say, well, actually, if you do the maths, the actual pot of available capital probably in the industry now, which is new money into new businesses, has dramatically shrunk because of the skew towards portfolio. Kind of curious, in relation to, look, you are a practitioner in exactly what might be preaching. So where would you say have you seen a change? Has COVID been sort of a transformational experience in your day to day, or not?
Yeah, for sure. I mean, everything from working from home, just the complete lack of face-to-face interaction. I think if I look at 2020, you can probably segment it where March, April, May was the confused period. We were all just focused on ourselves at Downing internally. How do we set ourselves up? There's so many teething issues with, you're on mute.
Which video conferencing do we go with?
Exactly, right? Like there's just how do we operate as a team? Is everyone healthy? Is everyone okay? Getting your office set up so that you can actually be productive. I think that was just March was late March into April was kind of, forget about everything else. We're just focusing on ourselves for a moment. And then there was obviously just spending a lot of time looking at portfolio companies. Do they have enough cash? What does this mean for them? Specifically, our consumer portfolio companies with all the supply chain disruption. I mean, one of the companies I work with, their dependencies were Italy and China in terms of manufacturing. They were like, oh God, it doesn't get any worse than that, So I think just from an attention perspective, the attention was first inwards looking, and then as an inwards looking at our own company, and then at portfolio. So I know for a lot of founders, it was frustrating because they couldn't get meetings were getting canceled, and things just weren't progressing. So that was kind of March, April into May. But then things started to pick up again. I think there was this kind of adjustment period of people, all right, I've got my desktop set up at home, I can be productive. We figured out how video conferencing works. We're good to go. And I think the summer period, which typically in VC land, August is quiet. Definitely, we saw a lot of deals, getting done. We did a bunch of investments as well. We grew our team. We had 2 people join. Well, someone joined in April, and then someone else joined in the summer. And then we kind of, now I guess towards Christmas time, things started to get a bit quiet again. And now with season 3 of lockdown, I feel like that's really impacted people quite heavily. Again, what does this mean?
Yeah.
The back to school that we're in at the moment. I mean, there's quite a few people we've talked to, kind of, it's a bit like a COVID hangover now. They can't get rid of it,
Like Groundhog Day.
Exactly. I think we were all very optimistic about 2021, and then obviously, we feel like we watched a trailer for a movie that now we're in. We're like, wait, what? This isn't what was promised to us. So it's felt like a slow start to the year, which, I appreciate there probably will be repercussions for founders.
Is that evolving into, just if we look at it from a founder perspective, do you think that if you do a comparison between the amount of companies that perhaps were coming through in that good period of 2020, has it just suddenly gone back to where we were in March in terms of the companies that you're kind of seeing in the pipeline? Or I'm just curious where
yeah, I think it's more the more important or the more interesting shift is that in terms of we're still doing a lot of outbound, and we're also aiming to do now that we're more, and I actually realized I never answered your question around the sectors and theses that we're now focused on, but because we're looking to be a lot more thesis driven sector focused, we also expect that most of our deal flow will actually be outbound. So us going out and finding and hunting opportunities. And again, that, the time that you have to do that when you're just trying to figure out, again, back to our portfolio companies, okay, oh no, how long are we going to be in this again? You just allocate less time to going out and hunting when there's so much uncertainty. So I think that's more, it's less about the inbound, more about our attention.
Do you think there's a lot of great companies out there to be hunted?
Yeah, definitely. I don't think that's, I don't think the entrepreneurial spirit has gone away. I do think that, 2020 was probably another year of reinforcing that it's so much about, and I'm paraphrasing this from another VC whose name I can't remember, but it was, we want to back believable business models, credible business models, not believable financial models. And, there's definitely an element of, it's not so much just about how good can you make the numbers look, but do your fundamental economics actually work? And I think, everyone has, since I joined VC, been talking about, we're at peak VC, we're now funding a, canned sparkling water business, Liquid Death. I don't know if you followed that, but that obviously, everyone was like, this is peak VC. How much more, strange consumer brands can the VC ecosystem fund before the bubble pops? And everyone's been talking about that genuinely since I joined. But what 2020 has forced is just a lot more of a focus on, does this company really have product market fit? And again, I'm specifically talking about the Series A stage, right, where we play now. And it's become easier to prove, I guess, because if you are fundamental to your customers' operations and you've built a product that solves a genuine pain point, then you're still getting in front of customers, you're still getting those meetings, and decisions may have been delayed slightly throughout 2020, but ultimately they're still with you, they're still buying into your proposition. So from that perspective, I think it's definitely been a bit of a shakeout, but probably a helpful wake-up call to a few founders as well, who may have thought, actually we had product market fit, but actually, if the first thing that customers do when there's a bit of uncertainty on the horizon is turn out of your product, it's probably not a good sign.
My question was on the deal flow. You mentioned that a lot of so after the disruption in March and April, a lot of the deals started getting done in August. Were those new inbound in the May period, or was that from the Q1 that was then continuing?
It's a good question, especially because a lot of VCs I think, Chris, you sent a survey out, and it was around would you invest in a company where you've never physically met the founder?
Which was the first, right, for a lot of
exactly.
firms at the time.
And I think what skewed the data a bit is because, and again, Chris, I think you picked up on this, was that, okay, but are you saying you've invested in a company, but actually you met them a year ago? So you have actually met them. It's just that you've not met them again recently. But, you know, that kind of, it's not proving that people can make are comfortable making an investment without physically meeting someone. So we invested in how many deals did we do last year? I think we did 5 or 6 investments. And most of them were US based, where I think most of the team, including our investment committee, had only met the founders virtually. But it took, that kind of confused period of March, April, May of, are we comfortable doing this? And I think it took us figuring out how to just work with each other remotely internally to then get comfortable with, okay, I think we can do this. And it just changes your due diligence process. We then started getting a lot more, we started doing a lot more due diligence in terms of speaking to customers. We probably may have spoken to 50% fewer people historically, but to compensate for the fact that we can't hang out in their offices, and then kind of absorb what's happening in the business. We've just had to be a lot more rigorous in our kind of desktop-based due diligence.
So I obviously, we all are in the industry and concerned about certain aspects of the industry. As you know, Kathy, from myself, Bloomberg, I was a big supporter of women in tech and worked a lot with Bloomberg Philanthropy, who, were probably quite ahead of their time in the way that they were trying to do stuff as well in this space. And, so I'm kind of keen to always ask people on the fund star side of the equation, women in tech, diversity, I suppose, in a way, ESG is another kind of thing that I've been working with as well over the last 20 odd years. Actually, I remember we had that when I was a broker as a key sort of, we're doing ESG this year, but lots of stuff said, lots of stuff, I argue that in all organizations, lots of tick boxing a lot across the area. But I'm just curious, what's your perspective? What's Downing's perspective? What's your, your personal perspective, on those 3 kind of key areas, which are hugely important, I think, to the whole industry and society.
Yeah, on the diversity note, so we were currently recruiting an associate, and we opened the floodgates through a LinkedIn post. And I was nervous about what we'd get back in terms of, are we going to have to work really hard to make sure that at the top of our funnel, we've got a really nice, diverse mix of candidates so that, we're not just recruiting people who look like us, think like us. And I was so positively surprised at just the diversity of candidates that came through, and diverse in every sense of the word, gender, backgrounds, race, location, honestly, it was a really happy moment when I realized, I looked at our funnel and I thought, this is fantastic. And then obviously thinking through, how does that happen? Is that an accident? And the answer is it's not an accident. And I look at our team, and I've always been super excited about, you look at the Downing team, the Downing Ventures team specifically in this case, and, we are 6 different nationalities, really totally different backgrounds, personality-wise, very, very different people, but that works. You need kind of differences in how people think and how people operate. And you need that. It's, that's how people who are different will feel comfortable applying to your positions. So the same goes for a portfolio. When you look at, if you have a diverse portfolio, and by diverse, I mean, you have, founders from all walks of life, they in turn tend to have different people in their network, which means that the way you're sourcing and accessing opportunities lends itself to having a pretty diverse pipeline in terms of opportunities, in terms of the kind of type of founders. So I think that's kind of how we've hacked it. And then what was the other thing you said about women?
So women, ESG.
ESG, that's the one. Yeah, so we hired some ESG consultants a couple months ago to come in and help us figure out how do we incorporate, ESG assessment into our investment process? And so that's been an ongoing piece of work, which someone Downing has taken ownership of. Currently, it is a checklist, although obviously we're kind of keen to make sure it isn't just a checkbox exercise. And the way we're really looking at it is about risk management. A lot of the questions on the checklist are just to get us thinking about, is the board run well? And they're questions that we really should be asking anyways, in terms of assessing the quality of the assessment, looking at different, supply chain risk, exposure to corruption, have they got the right policies in place? So we've got a process before an investment even goes to our investment committee, where we have to indicate against a set of criteria, how's the company performing. It is a discussion point during our investment committee as well. So, there's minutes against, did we discuss it? What was the outcome? And then there is a post-completion action list as well that we run through with portfolio companies. And I just think the important bit here is that it's about risk management, not just from us in terms of the risk of the investment, but also for the company. It's about good governance, for them internally in terms of how they run their business, but also looking at their wider supply chain and the impact that they have on, their stakeholders. So we're working on it. It's always a work in process, I guess.
Yeah. I always like to ask this question. It's kind of more about Kathy and more about the job and more about VC. The classic. What do you love about your job and what do you hate about your job? It's kind of,
these are the tough questions.
No, they're easy to answer. I love my job. I think it's the best job in the world. And I love it because of the kind of people that you get to come in contact with. I think as far as finance jobs goes, VC selects for a certain type of person. I'd say most investors, obviously there's always exceptions, but most investors I've come across are interested and interesting people. I've made a lot of friends in VC. It's actually frightening now thinking about the kind of people I, spend time with going for coffee. A lot of them, most of them are other VCs. So I've definitely built a little bubble around, but I really like that. And, how many other people, I know very few people actually who would happily spend, a Saturday hanging out with someone just to talk about their jobs. And, that might sound strange to a lot of people, but
I used to do a lot with hedge funds when I was in broking days, and they all seem to sort of know certain companies really well, and have certain strategies in place. I'm always curious with VCs, do you kind of like all talk about, that's a really great deal, and or share that kind of the snippets to each other, and or try and get involved together on certain deals?
I found it that way, absolutely, that it's a very collaborative industry, and that's because you probably are going to cross paths with each other on future deals, and again, most of the deals I've worked on have been co-investments.
It is, even though it has financially a huge amount of power, it is actually quite a close-knit community.
Oh, yeah. It feels like everyone knows everyone. Yeah, exactly. Yeah, definitely.
I mean, it will get bigger, I imagine. But
so it's my cohort of kind of associates. We all started around the same time, and there's always, I think every 5 years or something, there's a new kind of WhatsApp group or Telegram channel or Slack group, whatever, of like young VCs. But that group has, I think it was a couple hundred people when I joined, and is now a couple thousand people. And it is very, it's a group where people will post things like, oh, I'm looking for a recommendation, for a good lawyer who knows X, or does anyone know an SEO specialist, or hey, my portfolio company needs help with this, does anyone know anyone? And whenever I've posted something in that group, I get plenty of responses back, and it always amazes me just how cool that is. So I definitely I like the people on the VC side, but then I get a lot of energy from working with people who are just so motivated and kind of at the top of their fields. And, working with founders obviously is the best way of getting that. So I get so much energy from the job because I love it. I love the people, and it's intellectually as stimulating as it gets, right? Like every day you're learning something new, and you're exposed to stuff that, learn more about silicon photonics than I ever thought I would know.
On the bleeding edge.
On the bleeding edge, exactly. Yeah, words that I didn't know how to pronounce, I now understand. So I like it for various reasons. What is hard about the job?
Yeah, I suppose what's the, is there a niggle? Is there
Yeah.
anything that needs to be done better, maybe, that you think there's a bit of time inefficiency?
I do think that founders place a lot of value on getting feedback from VCs, which I always, I understand, but part of me also thinks you really shouldn't put that much value on my opinion. It's one person's opinion. And, it's also, I guess when I first started, I always thought, of course, why, if you've had a phone call with a founder or you've reviewed their pitch deck, you owe them feedback. And, you very quickly realize that's not scalable. When you're kind of looking at 5 companies a day, it's not scalable to give everyone feedback. And the other part of me is now, the opinion I've built around that is actually, you probably don't want my feedback. I've spent 2 minutes looking at your pitch deck, and my opinion is based on pattern recognition, a little bit, a hunch, maybe preliminary, like maybe basic understanding of what you do. But my feedback probably won't be that useful to you. And a lot of the times, the feedback is particularly difficult because you can explain away a lot of, or you can get comfortable with a lot of risk if you're really bullish on a team. And so in a lot of the times, the feedback is actually, listen, I'm just not that convinced you guys are the right people to be backing. But I also don't think that it's my place to give someone that kind of, feedback, because one, it puts people down. It's not a nice thing to say to someone, and I could be wrong. And so then I've ruined someone's day and made them, given them some feedback that is so subjective. And, I'm not sure how helpful that is. So that's probably the side of the job that I dislike the most. I find the most difficult is that, you have to make snap decisions with limited information. That's just, you can't do this job if you're not comfortable doing that. But it also means that you oftentimes just have to make a decision, and it's not scalable to give everyone feedback. Every once in a while I do, if I feel like a founder has shown that they will take it the right way, they'll take it with a grain of salt, and I feel like I can actually give feedback and it'll land well, but that's very rare. And usually I'll say, the email typically ends here, but I'm going to take it with a grain of salt. Here's some feedback, take it or leave it. This is just one person's opinion.
That's good.
Yeah.
And then I suppose as we're in this area, any, I suppose, Kathy's top 2 tips for founders? Are there any things that you see and you hear and you're like, oh God, no? or where you kind of, maybe all your colleagues groan at the same time.
There's like a whole Instagram or like Twitter channel on like what not to do in charts, when you've kind of got like the cumulative GMV chart or something like that. So that's probably one of my pet peeves, is like when founders when they're not on top of what KPIs, what indicators, leading and lagging, really matter for their business. That to me is the number one sign of it makes me nervous to progress conversations. They should be all over understanding, here's how we assess the health of our business, the health of an account. Here's how we know that what we're doing is working. And that's not just anecdotes about a customer said they really like what we're doing. It's really digging into the detail of, what does good engagement look like? Is that someone using your product once a day? Is it once a week? If it's once a week, why is it once a week? Why does that mean it's good? And so that's something I've been paying over the course of my VC career now more and more attention to, is how good are they at really understanding what the indicators are, and are they all over those metrics? So whatever you ask them, they just know, because they're obsessed with it. And then market size as well. Just, founders have a tendency to kind of go top down and say, our market is however many billion people in the world.
0.5%.
Yeah. And it's really, Gav, it's just wanting the detail on specifically them understanding our customer group has X budget. This is the total wallet size. And we think that realistically, they're going to allocate X budget to our problem. And we think over time, they're going to allocate more. And here's why.
It's more realistic.
Yeah, just that bottom-up calculation, which is based on their own data. It's not based on some market report they bought off the shelf, but it's based on actual customer conversations and just a really deep understanding for what the problem is. So you know, honestly, there's very few pitch decks I see where there's a bottom-up market size calculation that's in any way credible. And, you know, I will say this, most VCs just skip over the market size slide because they're like, whatever it is,
it's going to
totally
say billions or trillions, right?
Exactly, right? Exactly. So
one that drives me absolutely up the wall is when 99% of the pitch decks say, we have no competitors. It's like, you're not looking hard enough.
I think going back to that market size comment, the polite version I've heard from several VCs is the bubbles of air. The other version is the bubbles of
good charts.
Four-letter word that we're not into. So look, we're coming towards the end of our chat, and I've really enjoyed it. I think, you know, one thing we're always keen to stress when we have these conversations with lovely people like you, Kathy, is that you're obviously a very, very skilled and talented venture capital investor, and I would say that, and I think that's clear for everyone that's listened or watched this podcast to see, and I'm sure I would hope that they will be trying to reach out or follow up with you and to a certain extent, and you know, but Kathy, you are Kathy. I mean, what are you up to this year? What's the big plans? Have you got any burning ambitions outside of work that are...
Oh, Chris, you've asked an excellent question. Have you seen my strategically positioned
I was going to ask,
longboard?
Is that yours?
Yeah, it is mine. It is mine. I don't know how or why, but I woke up one day with a burning desire to learn how to longboard, and it has become an obsession.
When was that? How long ago was that?
It must have been, so lockdown season one, not quite March. No, I got into running, but then I was like, this is boring. What else can I do? So I actually ended up getting my first longboard around September time, but I think it was like July. So I did a bunch of research and I was like, how hard can it be to buy a longboard? Very hard. It's not just about buying a board, you know, there's like trucks and bearings and bushings and like beveled and non-beveled wheels. And I was like, what is going on? So did a lot of research and then ended up getting my first board, which is not in shop, but it's a cross between a longboard and a mountain board. So learned kind of on that and then upgraded to the handboard, which is, it's taller than me. I'm not sure how the angle on the camera. Yeah, it's huge.
And was that your
new board, basically?
So I go out, I board, and then I make videos about it. Yeah. So
was that your first experience being on a board of any kind, or surfer, snowboarder, skateboarder?
I snowboard. Yeah, I've never skated before though, so you know, and it's a very different feeling, and it takes a bit of, you know, a lot of the learning curve sucks. Like, and anyone who's ever skated before will tell you, like, it's the first couple of attempts.
Wear a helmet.
Well, yeah, I've had a few falls, but it takes a while, and you just it's one of those things where you make no progress for a really long time, and then all of a sudden you make and it feels fantastic. Yeah. So yeah, I've been longboarding and making videos about it. So skating and creating is my hobby, my lockdown hobby.
We'll have to get the link and share that.
Yeah.
Yes, you should send us one. But could it be a new career opening up?
No, definitely not. But you know what, actually, to be fair, and this just shows how obsessed with my job I am, I did realize, you know, it's a great hobby because the creating side specifically, I spent most of my Christmas break finding like different creator tools and how you can make really fun videos, you know, that are unlock creativity for people like me who really have zero. Yeah, not very creative, but I found a lot of apps that have just made it super easy to create fun compilations and, you know, make it look like I know what I'm doing. So
send us one of those for this.
It's on Instagram. I think my handle is creating and skating. So
there we go.
If you followed me, CeeLo 52,
not 55,
not 55.
I will follow you back, and I will look. So look, without further ado, I just want to say thank you very much for sharing.
Thanks for having me, guys. It's so much fun.
Wisdom and your experience, and I'm so proud to see.
Oh, thanks, Chris. You've played a role in my career. You know, I think you can take some credit.
And you in mine, I think. So, you know, but look, well done, and have a great weekend, and stay safe in
you too, guys.
And look, we hope this is going to be you know, a good start to our show, because you are the first person and I know it's a good start because I've really enjoyed listening, and then hopefully we you know, in the future we may, you know, be back for future seasons to hear where you are. And
The
Yeah.
update. Yeah.
thanks, Kathy.
Probably with like a concussion or something, but yeah, because I think you should go feed your kids. They're probably clawing at the door.
They're gonna get that. So
All right, it's been
again.
fun.
Take
Bye,
care.
guys.
Bye.